Forex trading, also known as foreign exchange trading, involves the buying and selling of currencies in the global market. While it can be challenging, many traders aim to make a profit and even set specific daily targets, such as earning $1,000 per day. Achieving this goal requires a combination of knowledge, skill, and effective strategies. In this article, we will explore some simple Forex trading strategies that may help you reach the $1,000 per day mark. Before diving into specific strategies, it's crucial to have a solid understanding of the basics of Forex trading. The Forex market operates 24 hours a day, 5 days a week, and involves the exchange of currencies. Traders aim to profit from the fluctuations in currency prices. Two key concepts to grasp are long and short positions. Going long means buying a currency with the expectation that its value will increase, while going short involves selling a currency with the anticipation that its value will decrease. One effective strategy for achieving daily profit targets is to focus on major currency pairs. These pairs include currencies from the world's largest and most stable economies, such as the US dollar euro, Japanese yen, JOID, and British pound. Major pairs tend to have more liquidity and less volatility compared to exotic pairs, making them suitable for traders aiming to make consistent profits. Technical analysis involves studying past market data, such as price charts and trading volumes, to forecast future price movements. Traders can use various technical indicators, such as moving averages, relative strength index (RSI), and Bollinger Bands to make informed decisions. Analyzing trends and identifying key support and resistance levels can help traders enter and exit positions strategically. Setting realistic daily profit targets is essential for successful Forex trading. Instead of aiming for huge profits in a single trade, set achievable goals such as $1,000 per day. Additionally, effective risk management is crucial. This involves setting stop-loss orders to limit potential losses and maintaining a favorable risk-reward ratio. By managing risks, traders can protect their capital and ensure long-term success. Forex market experiences different levels of activity throughout the day due to global trading sessions. Understanding these market dynamics can help traders time their trades wisely. The major trading sessions are the Asian-European. The highest volatility often occurs when sessions overlap, providing opportunities for profitable trades. While leverage can amplify profits, it also increases the risk of significant losses. It's crucial to use leverage wisely and only trade with amounts you can afford to lose. Many experienced traders recommend using low leverage, such as 10-1R21, to minimize risk. Additionally, having a clear understanding of margin requirements and the potential impact of leverage on your account is essential. Economic events, such as interest rate decisions, employment reports, and GDP announcements, can significantly impact currency prices. Staying informed about these events and their potential impact on the market can help traders make more informed decisions. Economic calendars are valuable tools for tracking upcoming events and planning trades accordingly. Learning from the experiences of successful traders can provide valuable insights, and many successful Forex traders share their strategies, tips, and mistakes through blogs, forums, and educational platforms. Take advantage of these resources to gain a deeper understanding of the market and refine your trading approach. Before risking real money, it's advisable to practice trading strategies with a demo account. Demo accounts allow traders to execute trades in a simulated environment, helping them gain experience and confidence without the fear of financial loss. To use this opportunity to test different strategies, fine-tune your approach, and develop a trading plan. Remember, achieving a daily profit of $1,000 in Forex trading requires a combination of knowledge, skill, and effective strategies. By focusing on major currency pairs, using technical analysis, setting realistic goals, timing trades wisely, managing risks, and staying informed about economic events, traders can increase their chances of success. Learning from successful traders and practicing with a demo account are additional steps to hone your skills. Remember that consistency and discipline are key in the dynamic world of Forex trading. While profits can be rewarding, it's crucial to approach trading with caution and a well-thought-out